Hello, I'm Gayeon Lee. Today I will introduce financial reports and analysis of Delta Airlines. The table of contents is as follows. Delta Airlines is the oldest airline in the United States and the seventh oldest worldwide. It is one of the major U.S. airlines. It is one of the founding members of Aviation Alliance SkyTeam. Delta Airlines operates flights to many destinations in various countries. Delta Airlines was able to establish itself as the largest airline in the United States due to the way it operated after the September 11th attacks. Delta Airlines went bankrupt and barely recovered at that time. Even in difficult financial situations, Delta Airlines CEO became the side of employees and it was brought out of the woods. This is why this company has been operating well so far. And now here is the financial analysis of Delta Airlines. First, Delta Airlines' current ratio is gradually decreasing. Ability to repay current liabilities with current assets is decreasing. It is not a good sign for Delta. Second, Delta's asset ratio is falling and the firm's financial position is not getting better. Third, Delta Airlines' total asset turnover is quite high and increasing. It shows investors are more likely to invest Delta Airlines, preferring companies with high asset turnover ratio. Fourth, the fatter the bond coupons, the less credit risk Delta Airlines will have, and the management of receivables will enable them to maintain their credit standing in the market. Fifth, Delta Airlines' days in receivable has declined, confirming that the company's financial position has changed positively. Sixth, proper utilization of liabilities can reduce capital costs and create opportunities for tax benefits. In this regard, the increase in the debt ratio is positive for Delta Airlines. Seventh, this low times interest earned ratio indicates that the company is likely to struggle with interest payments and it can increase financial risk. 18th, the increase of rate of return on total assets shows that the company is guaranteed long-term growth and stability. 9th, this high rate of return on net sales means that the company is generating high profits from its sales. 10th, increase of earnings per share indicates that investors are likely to invest heavily in the companies as it has grown potential and the ability to generate stable long-term returns. 11th, Delta Airlines return on common shareholder equity is increasing and it indicates that the company's financial position is improving. 12th, the uptick of book value per share ratio shows that the company is efficiently managing its assets. 13th, some investors want to earn a steady return of dividends and the high dividend yield ratio of Delta could be an attractive condition for those investors. 14th, it is difficult to predict how the price-earnings ratio will change in the future, so it seems better to analyze the companies using the different ratio. 15th, high net sales ratio translates to the positive factor, so the increase in net sales ratio from Delta Airlines also shows the financial situation of the company is positive. 16th, it shows Delta Airlines is keeping the company's financial situation well under control by reducing operating costs and maximizing profits. 17th, it indicates that Delta Airlines generates relatively more revenue per employee. To conclude, there is a saying that goes oldies and but goodies. Applying this to Delta Airlines, it has been a top U.S. airline for quite a long time and it is one of the good companies that has survived the 9/11 attacks and the COVID-19 pandemic. It grows well without significant changes as indicated by the result of various financial analysis. Through this analysis, we learn how financial statements are structured for companies with stable management. I look forward to the further development of Delta Airlines. Thank you for listening.